Hello students, how are you? In this course we are going to cover the one of the top most oscillator, stochastic. Stochastic is based on percentage K and percentage D. Who was the founder of stochastic? That was George Lane. George Lane was a security trader, author, educator, speaker and technical analysis. He was the part of the group of future traders in Chicago who developed the stochastic oscillator, which is one of the core indicators used today among technical analysis. Source Wikipedia. Now I want to talk about Ralph Destent and the technical guru Roy Larson. They were the seniors to George Lane, and the life has turned. Roy Lace retired as a principal of the college, and there was some health problem with the Destent. At that point of time, George Lane took the charge, and with commodity, he started teaching the equity also. Now he was the boss for equity as well as for the commodity trading. There was a team of this Roy Larson and Ralph Destent, those who are discovered many oscillators starting from percentage A to percentage Z, percentage A, B, C, D, E, F, like that. And out of it, the most popular and the successful oscillator that comes up as percentage K and percentage D, and the third one was the percentage D. So percentage R was restructured and redefined and developed by Mr. Larry Williams. Larry Williams, I need not to give any introduction. Richard Williams is an American author, stock and commodity trader and politician from state of Montana. He is the father of actress Michael Williams. Born on 6th of October 1942, he managed to develop percentage remarkably, working very well. And now, not only that, he managed to win many technical analysis competitions. Continuously he won 2 competitions. After that, he was barred from participating. And the third time, his daughter won that competition. Okay, in this chapter, we are going to talk about the George Lane's mathematical formula of stochastic. Percentage K is derived by C minus L14. C stands for the current closing of the period, minus L14, lowest low of last 14 days, divided by H14. H stands for highest high of last 14 days, minus L14, the lowest low of last 14 days. So what we get? We get C minus L14 divided by high of last 14 days minus low of last 14 days. We get percentage K, and percentage D is derived by the 3-period moving average of percentage K. 3 period means what? If we are on daily chart, then 3 days moving average of percentage K. If we are on weekly chart, so 3 weeks average, moving average of percentage K. And if it is an hourly chart, then 3 hours moving average of percentage K. So that way we are going to get on different time frame percentage K as well as percentage D. So I am writing here the period, not mentioning where we can replace it with anything. Initially, percentage D was used for divergence between the price movement and the oscillator. Percentage D, if suppose both are in the same rhythm, they are moving up together and falling together, it means that they are in a rhythm. But sometimes what it has, the price starts moving up and oscillator percentage D is falling, then that is a diversion between the two. So that can generate a early signal of buy and sell. And the second way to get the buy and sell is the crossover between the percentage K and percentage D. Percentage K and percentage D move within the scale of 0 to 100 within overbought and oversold conditions. it will not move above 100 or not fall below 0. Or if we are not converting into percentage, then it will be 0 to 1. It will not move above 1 and will not fall below 0. It will be never it will be negative. Before we talk how to use stochastic, let's learn how to apply mathematical formula of stochastic. This is very, very important. Until and unless we are not going to understand on which mathematical formula we are working, we will be not able to justify the conditions what we get on that oscillator or indicator. So the most important is to learn what mathematical formula is going to work. If we will understand that, then we will be able to absorb the movement on which formula it is being based. If we will understand that, absorb that in our subconscious mind, then definitely we will be able to perform in a better manner. Now let's start that. I am on for the data, I am on nseindia.com. Here, instead of equity, I am writing equity derivatives, and here I am taking Nifty 50. Nifty 50 is a benchmark of top 50 stocks of India. So I have taken, this is 27th of June 2019. Let's take this expiry only, and I will go on historical data and try to get last 3 months data. Okay, I have selected 3 months data, and now I will go on the button get data. Now this data is available. Now I am going to download this data to Excel sheet. Now this all complete data is available, and here what I want, open, high, low and the close. But I don't need this settlement price or turnover or open interest, so I am going to remove this. So I will remove this all four outcomes, and now I am left with open, high, low and close, and I will work on the formula of percentage K, C minus L14 divided by high 14 minus low 14, lowest low of last 14 days. I am working on day chart, so I will. Alright, first what I have to do now is, now I have to select at least 14 periods data. This is 1, let's go up, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. So these are the 14 cells which I have selected. Now I will work on this mathematical formula. I will look for the highest high in these 14 days. It is 11,950. I'm going to select this, and then I will look for the lowest low of these last 14 days. Lowest low of last 14 days is 11,691. Now I have the main input where my formula will work. First what I will do, I will take 11,864, which is in E38 cell, that is the closing of the day, minus the lowest low, that is 11,691, divided by highest high of last 14 days, which is 11,950, minus lowest low of last 14 days, that is 11,691, and bracket close, and I will get the figure. Now it is 0.7. Alright, it is 0.7, and now I will drag it to the last cell, last cell. Now you can see there in outcome there are the many minus points and the more than one also. That may be because there are scale is 0 and 1, then it will not fall below 0 and will not move above 1. So then if I am getting, then there is a new low or new high is being formed. So this is a new low, 11,690. I have taken that. I will always take previous 14 days high and low, replace high and low with the new ones. If there is a lower low or the higher low, then I am going to replace it with this new number. This exercise is just to understand formula only. Otherwise, software will design at its own. So whether the softwares or the applications are available, need not to do this all. To understand how the formula works, That is very important. If we are going to understand how the mathematical formula is going to work, then what? That will be a real advantage to us to deal with it. Right? Now this is the lower low is being formed at 11,580. So replace new lower low with the previous one which is being breached. So earlier it was 690, now it is 673. I have taken 673, and in the next cell I am going to take 11,580 as the lowest low of last 14 period or 14 days. Okay, then I have replaced 11,580, and then the value it has come 0. 0 means now it is extremely oversold. Now again there is a new low is being formed at 11,450, that is being placed. Now new low is being formed 11,379. 11,337, that is being replaced, and again the value is, it was 0, now it is 0.1. It is near to 0 only. New low is being formed 11,327. Then I am going to replace this. Again it has reached stochastic value. Again it has reached to 0. Now new low is being formed 11,200, and then I am going to replace it with 11,200. So the market is falling and making lower lows, and now it is a new low is being formed 11,180. So I am going to replace it with 11,180. Now again it has reached 0.1, just for the reason because from 11,180 price has moved up and closed at 11,292. All right, so this is the lowest low is being formed, so I am just going to drag it to the highest point. So now the next value, what I will see, it has from 0, it has moved to 0.2, 0.4, 0.9. Replace, now the new high is being formed. So replaced higher high with the previous highest high, as we were replacing the lowest low. Now the new high has been formed, so I have taken 12,108. Previous high of 11,950 is being breached. So this value is 0.6. I am going to drag it to the highest level. Alright. Now the high of 12,108 is not being breached, and the lowest low of 11,800 is also not being breached. Now percentage D is equal to what? 3 period moving average of percentage K. I am going to do that. So I am going to take the first data of three periods. I am going to add these 3 and divide it by 3. Alright, I get the first value of percentage D. Here I need not to do any other exercise. I am going to drag it to the highest point. I will get the percentage value of the percentage D. Now this percentage K or percentage D is available. Now what I have to do to generate a chart, I am going to take the dates first, and then I will put the data of percentage K and percentage D. So dates are being placed. Now I am just doing like a child. If I am able to make you understand how it works, this mathematical formula, so then I will be the happiest person on this planet. Now I have taken the value of percentage K and now the percentage of D. Only first data I have to take, rest automatically will be cut and paste or copied. Now let's plot this percentage K and percentage D in a chart to visualize how it look on the charts and how it work. Let's do that. Insert and then chart, line chart I am going to select, and then this chart is being derived. The blue line stands for percentage K and the red line stands for percentage D. That is available with me. Now, if I have to play on the crossover, how it will be done? Then whenever the blue line drops below the red line, then I am going to sell, and once the blue lines moves above the red line, I am going to buy. But it is not that easy. We will just, it is for the understanding purpose. This is the first slogan. I am going to give it to you. Now let's match it with the real chart. Have we worked correctly or not? Our mathematical formula which we have worked on our Excel is going to match with the charts which are being displayed on trading platforms or the chart platforms. All right, so this is our chart, and then another one is the real chart. Both are quite similar or dot on dot. They are the same, as it's showing a V-shape recovery. It's showing V-shape. This is an angle which is just pointed upward, and then again it is fall. Same is being displayed here in the real chart. It is exactly the same, and this was the topped out, and there is a zigzag. ABC is being formed, and same here the ABC is being formed. ABC means that zigzag is being formed, and then there is, this is a same red line is also red line over here, and the dotted line on the real chart of percentage D is also perfectly exactly the same. So what we have worked on this mathematical formula is the same. Now what I am going to do in the real chart, there is some or so many whipsas. To just control those whipsas, I am going on the settings, and here percentage K 14 and percentage D remains the same. I am going to make slowing from 1 to 3. I am making slowing it by 3 points, and once I will say press this OK, and then you will find the change in the chart lines of this stochastic. Just watch carefully. When I will press the OK button, there will be a change on the chart. Here I have just make it OK. Now I am going to close, and then there will be, now I have closed, and with 1433 we can see even a better smoothened chart compared to that. There are the less whipsaws, and then more precise buy or signals are going to emerge. Alright, so once the blue line drops below the red line, the sell signal has been emerged. Look here, the blue lines has crossed above the red line. Then it has given a buy signal. It is same in our chart also, but as it is being smoothened by slowing by 3 points, then it has generated a better and clear picture of buy and sell signal. As the blue line has crossed above this red line, the buy emerged on the price here, and from there the price have started moving up. Where here still there are the two whipsaws, but the market is very much sideways. So it is when the market will be very much in sideways, then it will show some false buy and sell signals also. But these buy sell signals also can generate some money, or we can lose some money. But once there will be a turn in the market, then there will be a good show. There will be a good opportunity to yield some profit. Please always learn how to use your tool. Until and unless you are not going to do, then only this buy above or sell below is not going to help it out. Stochastic is not just a systematic tool, it is a systematic tool plus an art to analyze this stochastic. Right? But oversold and overbought conditions can be judged by it. We will play with the diversions, we will play with the crossovers, and we will try to understand how to use this mathematical formula of stochastic in a better manner with an experience What I will suggest, you go for 5 years data or 10 years data, historical data, and check it out, and then be ready for understanding this course. Good luck, happy trading, and happy investing to all my students. Lots of love and blessings.